Hi, good morning everybody. This is Nicholas Teo on the 17th of August 2015 from CMC Markets here in Singapore. A few things this morning. Out this morning was the GDP or the second quarter GDP numbers from Japan. It came out at an annualized number of minus 1.6. This contraction, although it's a contraction compares against the 2.4% previous read, is actually better than what was expected. Market had actually expected a 1.9 or a minus 1.9%. Now this quarter-on-quarter number of minus 0.4% is also better than the 0.5% expected decline. Now off the bat we saw a positive response on the Nikkei 225 or the Japan 225 in this case, tagging up about 32 points or so. If I were to just pull this number up, you're seeing that the Nikkei has actually been, or rather the Japan 225 has actually been hovering at a very tight range since, or rather for the last 2 months or so. And incidentally, this is also very well supported by the fact that over this period of time, the global equity markets actually fell off a cliff, namely led by the Chinese situation, and also the European indices were also whacked down quite hard because of Greece. Japan actually followed suit, but this was quickly reversed and we came back into this comfort range, so-called, that the Nikkei has managed to find for at least the last 2-3 months or so. Now any break up or break down from this range will probably set things off in a different way, and there are many different trigger points that could arise. Today's GDP numbers did not tell too much or give away too much, and we are seeing things remain reasonably comfortable in this level. But later on in the week we're going to see triggers coming from the US when the Fed sort of releases the minutes for the last FOMC meeting, which I think the market will be looking for clues going into the September Fed meeting. On another note, the Singapore economy reported that not all domestic exports came in actually better than expected. It came in with a 2% decline or so. The market was expecting for a bigger drop than that. Nonetheless, it was unable to cause any form of a rebound where the local currency is concerned. In fact, the local currency, in terms of the dollar Sing, basically gained a bit more strength, clearly highlighting the weakness that the Singapore dollar has actually been going through this last period of time. Firstly, because of the influences of the yuan here, and then subsequently when we saw the Malaysian ringgit being hammered down to a 17-year high of more than 4 dollar ringgit, we are actually seeing the Singapore dollar follow suit. Now it's still early days, but this dollar Sing pair is clearly in this territory, which is well above the 139 level, which has in the past proven to be a high here. So I think it's still early days, and I think the influences of the yuan's devaluation trickling on to rippling effect by the ringgit, the rupiah, the Thai baht has led to this weakness in the Sing dollar, highlighted by this dollar Sing chart that we've just highlighted. Also finally, just a bit of news on Noble. Late last Friday, after the market had shut, several brokers that remain unnamed has actually come out to restrict trading on this stock, especially on the buy side. Reasons given were for control of credit exposure to this name. Clearly this set off of selling that came despite this big rebound down here clearly increases the concern of a lot of credit departments for a lot of brokerage houses from a standpoint of clients wanting to sort of bargain hunt. Now this could lead to a snowball effect of other houses or other brokerage houses imposing similar sort of credit controls or restriction on trading controls. It remains to be seen. Noble today will announce, or rather will host a investor information session where I believe the CEO will be releasing some sort of a hosting a press conference, but clearly this stock is very much still in play. We're still looking at this level being tested, the 43.5 level, which is the low at the end of July. whether it's going to be tested and a bounce from this remains to be seen, but clearly the forces on the negative side has proven to be very strong, despite the results, despite the PwC sort of endorsement, and despite the fact that I mean, we have seen this stock actually falling or more than halving actually over the last 6 months or so. But anyway, a few things that to watch out for in this early trade. It's actually quite quiet. China is actually looking a bit weak this morning, trickling onto some of the the Hong Kong markets. But for the rest of the region, things are generally rather quiet for a start. Anyway, thank you very much.